December Money Monthly. The stock market roared into the current month of December after having a historic November. In fact, the S&P 500 rose 10.9%, making it the second best November since 1928. The rise was largely the result of two factors. The first was the fact that many analysts now believe that Congress will split, meaning neither Republicans or Democrats will have control of both the House and the Senate. This power split would mean that it is less likely that any big laws get passed that would cause big disruptions or uncertainty. This is one reason the S&P 500 has had an annual return of 17.2% when Congress was split. The second factor behind the November rise was the fact that large pharmaceutical companies like Moderna and Pfizer announced that their COVID-19 vaccines were over 90% effective, which has led many investors to see light at the end of the tunnel and a path back to normality. So how has all of this changed investor preferences? Well, for one, investors have shifted some of their money out of companies that have benefited from the quarantine, like Zoom and Microsoft, and into companies that have been hardest hit over the last few months, including smaller undervalued companies, collectively known as small cap value companies. One risk of investing in these types of companies, however, is that around 1/3 of them are in the energy and financial sectors. This could be a problem if oil prices remain low and interest rates remain close to zero, since financial institutions, like banks, make less revenue in that environment. Going forward, it seems investors will need to decide whether the optimism from the vaccine can continue carrying the stock market higher, or the rising COVID cases will start to hold the market back over the next few months.